So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. This is 50 Pips, rocking and rolling here. No trade calls, recommendations, or response for their own stuff. We're here for educational purpose only. Sessions are recorded. You'll get an email with the recording as soon as it's over, as long as it's for your own personal use only. Nobody will be blocked and nobody will be banned. And we will all behave as one big happy family. So, how's everybody doing? We ready to rock and roll? Okay, let's do this. So what's happening? Well, a lot of things are going on today. It's going to be a little bit of a funky day, right? So that's just the way the cookie crumbles. And let's get through it. So I'm going to try and go through as many things as possible. Let's see how many people make it in time for the session or how many people are late. But anyways, markets locked, so limit down overnight. Clearly, the situation is not pretty. It looks like we're going to open straight down into the next circus breaker, so probably get halted straight away into the open. If we trade this way, if you're looking at SPY, well, it's up just down about 6.9, something like that. So we'll have to see now what to look for in terms of the levels and where we are. Now, keep in mind, again, there's a lot of pain across the board. Stuff will be breaking today. So, just don't be a hero. There's no need to be a hero, okay? If anybody has any comments, any questions, shoot. If not, I'll go through what I think are the most interesting things and try and update on some of the moves we're looking at and we're trading, okay? So as far as the ES is concerned, or as far as equities are concerned, this move back down into these lows is what we consider, right, that primary move, right? This is on the weekly. I'm on the weekly. Now, clearly, it's going to be, if you don't see this area being supported early on in the day, then we could easily see the flush. Now, what's happening is that our base case was that we were going to try and bounce here, right, pretty much around this 2900 level, and we were looking for a bounce into the FOMC meeting, into quad witching, right, into expiry, and then another opportunity to sell them back out into this final target, which we've been talking about for a while, which is the 2600, 2400. Now, clearly there is a chance that we just go down there in extension. You have to be prepared for that. The problem here with pressing shorts is that you know that if Trump wants any kind of chance of getting reelected, he has to unleash, the mother of all packages, or, Mnuchin has to start calling left, right, and center. I have no idea, but they have to do something. If not, there's no way he's going to get reelected, right? Now, keep in mind that you can't press the short side here. As we've been discussing, we discussed in the video update, don't be surprised, if you see them lock them, if you see something change, if you see them stop ban short selling on coronavirus affected stocks, whether that's, transports or whatever they might, on freeze something to do with credit, or ban short selling on financials. You just never know, right? When stuff gets hairy, when we start to move outside of normal kind of move, when we move into 5, 6, 7 sigma events, stuff can break and rules change, okay? So it's going to be interesting to see what happens here. Clearly, the focus is going to be, can they find some kind of support inside 2770 to 2730? You just call it, as long as the 2700 holds. And if not, then you'd have to expect a complete flush. Now, from where we stand, right, that move, and they're halted, so the ES are halted down, 4.89, pretty much 5%. You've got about, to get into that 2700, you've got another 4%. So it'll get halted again before that. But if we go through again, the chances of bounce and profit taking increase substantially, because we've also got that 200-week coming in there. But keep in mind that all the way into that zone is only another 10%. So I know it sounds funny me saying only another 10%, but it is entirely possible. This is kind of like when we look at strategies that try and trade DR3, DS3 ranges, right? And what we always say is as long as we're inside those ranges, we've got edge because we know how things behave, 90%, 90 plus percent of the time. When we're outside those ranges, that's when we'll say any new low possible, any new high possible. So there's very, very little edge in trying to be aggressive, also because in a situation where people are getting margin called, people are getting unwound, stuff happens, right? So correlations go out of whack and it's very hard to read too much into things. Also, keep in mind that the fact that other asset classes are open overnight, but SPOOs or U.S. equity futures were shut, it means that people have to offset flows or manage their risk through other instruments. So those might be moving abnormally because that's the only place where people can get liquidity, or that's the only place where people can do anything. Okay, so again, it's going to be interesting to see here. Why are we talking about that whole 26, 24? Okay, yeah, well, if we're looking at this is basically a long-term chart we've looked at in the past. And what we've seen is that, and we actually traded these moves, but just to not go too back into history, remember when we had the puke back in December 2018, you see how we had this beautiful little pin at the 200 week and protecting these ascending trend lines that indeed have been holding, pretty much since 2009, right? So here when we started looking at this range, the 200 was lower, but it's just the confluence of a couple of things. The 200 week, these trend lines, and also this previous support, and also this is a breakout zone where that support held already. So there's a lot of confluence around that zone. If that breaks, what would be the next area we'd be looking at, where that is not a surprise, everybody in here should be aware, and that would take us back to the election night range. You remember for a long time we said if the Trump presidency, if the House of Cards comes crumbling down, the only normal thing to expect would be to see us unwind the whole fake Trump rally with fake incentives, fake narratives, fake news, fake deals, So if that breaks, then you'd have to expect that the complete fiasco is going to materialize. And what is the complete fiasco? Is that Trump election to those highs, the market gives back because it's pretty much as fake as Trump's hair or Trump's tan, right? The rally. So that would be that's the next level to look at. But just to be clear, people are getting a little bit excited with these ranges. That means another 20, 30, 20, 25% down. So that's already a big move, okay? So that's what we would be focusing on. Now, another thing I wanted to discuss and another thing I wanted to highlight, because as always, we talk about these things before they happen, not after they happen. What do we say on Sunday night? Sorry, on Friday before going home. We said on Friday going home, there is a possibility, we've been looking for risk off over the weekends. We've been looking for a risk off to build as developments in the other countries, France, Germany, Spain, US catch up to the rate we've seen pick up in Italy. And we said, don't be surprised if you get a liquidity event in the open. And that's why we said, if you're short yen, either, we had this discussion with a couple of you, either your target was that 104.60 mark, and therefore we would have been flat into the close on Friday without holding any risk over the weekend. But if you were following our broader discussion and a move all the way back to the 100, we said layer your TPs out overnight. leave them out in the system. They could be layered down at 50 pip increments at whatever, because things can move quick and you want to make sure you get filled. And if we open lower, you'll get filled at a better price. So for those of you who did that, well done. I suspect most people are pretty much probably, maybe 10-15% of the position left, but pretty much flat. And here what you look at is, again, any rally that can't make it back above the 104.60 will be a sale for us to try and take out that 100. I refer you back to the recording and the discussion we had on Friday about BOJ intervention zones, what the key levels are for repatriation, unwinding of treasury positions, etc. We discussed that on Friday. I'm not going to go through it again, but if at any point something big gets announced and we trade back above the 104.60, would not be surprised to see this try and rally all the way back into that 109, into this descending trend line. Make sense? Who's still holding any partials on this yen? Smalls. Okay. Now, the other trade, which this is from our first video of the year of the 2020 outlook and trades, we talked about USD CAD, about being the trade that we suspected was going to catch most people off guard. CAD holding that 131 for a break into the 136s. So again, that trade is pretty much done in terms of primary move. Again, nobody could have foreseen what happened in crude, but you're not going to complain if you were long CAD. Here, what to look for. As long as we close the day below here, this high called the 138, you could see some kind of consolidation, some kind of wheeling and dealing. But if we take this out in an aggressive manner, then as we've been discussing, the path of least resistance is likely for us to go all the way back out and print new highs. As we said, the Canadian economy is a mess. Look at what's happening on Saudi, Russia war on crude. It's going to be a mess. So it makes sense to be aggressive on trails. I wouldn't be adding, but it makes sense to try and be aggressive on trails on this position. Does that make sense? Okay, good stuff. So Euro USD. This is, as we said, watch out. We expect this to break higher. We're looking at bigger levels. Now, watch out here. You don't want to be a pig. Continue to trail at this point. If the move is good, you can even trail below that 112 mark. Any retracement should hold if we finally get that completion. Again, we think a more normal neutral territory is 116 to 118. Now, it doesn't mean that it can't go higher. It doesn't mean it can't go lower. But as long as that 112 holds, that's what we would be looking for. A couple of you are on this trade too, just to make sure. If you went home short JNK, this is going to open down. Looks like it's going to open down 5 or 6%. I think they can. It's much easier to announce something on credit, so be careful. But here, there's a very big unwind here, right? Our primary move was that trade lower into these lows, and that's done. But here, there is no reason why this can't get super ugly. This is probably what can get the ugliest, right? And that goes in line with what we had discussed with XLE, right? We said this is where the real pain is going to come, especially if credit breaks. And you see what's happened, right? We had that first puke back down into these lows, but now this is set to open below this 209 level. This is going to be super ugly. We talked about the fact that this could easily come back and unwind all the way into these lows. It looks like it's probably going to open lower. Now, I can't stress this enough. As we always say, if you wake up to a Christmas present, don't be a pig. take some off, take it, say thank you. I don't care what move you're in, how hard you work to build a position. Nobody is going to tell me that they expected crude to open down 34%. Okay. And again, this is why we always say, and I keep on being a pain here saying you have no idea what kind of risk if you're going home naked anything over the weekend, right? So a lot of people are going to be waking up to a very ugly reality. The open's going to be a mess, but if you wake up to a present, no matter what your bigger picture view is, at least in normal conditions, at least you'd want to take 50% off. But I'm sorry, in my book, if you wake up to this kind of present, no matter how good the move can run, I'd be taking 75 to 85% off. Does that make sense? Okay, now any other comments, any other chart, anything anybody wants to look at right here, right now? Yeah, I mean, keep in mind that a couple of things here. So Bitcoin, what's interesting is that you look at how well the channel's been doing, right? Everybody thought it was breaking out and it keeps on working beautifully, right? We're right back at mid, so we can consider this fairly neutral. Ray, I know you're short. I'd be taking some off. I'd be pretty much, I think percentage play here is to take to take it off, right? Or manage small. And the other thing which I wanted to say where I got a lot of pushback on is keep in mind, look at Bund, right? And I know it sounded crazy. We said the only trade in town, right, is at least short term, is to short dollar, long bonds, long gold, long euro, short stocks, short crude. Those are the trades, right? And look at the Bund here. Again, targets are, you just don't know what the target can be, but it really looks like it's trying to press back into that 123 extension. And if people went home short UBs because they thought, oh, well, you're never going to get the kind of move you saw on Friday again when we were up, about 7%, about what was it, $22 a contract, $22,000 a contract. Well, I kid you not, we printed up, almost 10% today. So this is, again, it's just the trade we've been looking at, right? It's just everything coming together and all those moves. So here also into the open, for those of you who are still holding, we would have flattened out a little bit earlier, but those of you who wanted to hold that long BND or TLT positions, this, take some off. Don't be an absolute swine. Please try and manage that. Okay. Good stuff. So let's look at also some more tactical positions, some trades for today as we go into the cash open. Let me just